Hey, I'm Cramer. Welcome to Have Money. Welcome to Cramerica. I'll be my friends. I'm just trying to make good money. My job is not just to entertain you, but to educate, to teach you about how days like today can happen. Call me 1-800-743-CNBC. Tweet me, Jim Cramer. You can't blame anyone for being confused here. A little more than a month ago, the president declared Liberation Day, putting forward a tariff regime that was far more punitive than anyone could have imagined. President Trump's Liberation Day tariffs were much higher than the disastrous Smoot-Hawley tariffs that helped contribute to the Great Depression. It crushed the market. Trillions were lost. Bulls were turned into bears. Bears were turned into meat-eating grizzlies. And money poured out of stocks. 6 weeks later, it's like the whole thing never happened. Stocks have been bouncing back ever since, including today, where the Dow dipped 270 points. But the S&P gained 0.72%, and the Nasdaq jumped 1.61%. The S&P, at one point down almost 17%, at one point this year, is now positive for the year. It is an astounding comeback. All day I heard that the market went higher because we had a cooler than expected consumer price index number. Okay, it's true. Inflation only increased by 2.3%, less than expected. That's right where the Fed should be willing to cut rates if the economy softens from here. But long-term interest rates actually went up today, not down. So clearly nobody's betting on rate cuts. Stocks that thrive when rates go higher, the defense stocks, well, they got bruised today, all right? I mean, the drug stocks took it on the chin. It was the exact opposite of what you would expect. So the CPI, it had nothing to do with this move. No, what happened today, what happened yesterday, and what's happened for the last few weeks is nothing other than a gigantic offsides call in football. The big money, the hedge funds, and the fast traders have been caught on the other side of the line of scrimmage, and it is costing them. Now they've had to try to get back on sides before the ball is snapped. And because they have so much money bet the wrong way, they just can't do it in time. They need sellers, natural sellers, to surface so they can avoid the penalties they're facing. But the sellers aren't showing up. Why should they? The game's now going their way. A president who had been perhaps unwittingly on the side of the Bears has switched teams and become their worst enemy. How did this happen? Honestly, it's not really clear. Was it the executives who met with Trump and told him that his tariff plans would cause a huge amount of inflation and empty shelves in stores, making people absolutely miserable? Was he upset that his base would be hurt by rising prices? Did he fear that he'd cause a wave of inflation like we had under President Biden, which President Trump knows helped him retake the White House? Did he recognize that there was another way to extract wealth from other countries, like the wealth that he's extracting from the Saudis? Or did Trump simply realize that he wasn't going to accomplish what he wanted to do, so he switched sides? Because, well, why not? Why be wedded to a strategy that might hurt the country and not help it? I mean, that's not his style. In other words, why not be arbitrary? Why not be mercurial? Because you don't like what you're hearing from business people whom you trust. One thing's for certain, the market simply wasn't big enough for those who were betting against stocks to be able to bring in their short positions and simultaneously do some buying to participate in this rally. Or to put it in a way that we all understand, Trump, too, the man who cared more about tariffs than progress, had taken a backseat to Trump 1, who still wants tariffs, but maybe getting more for companies by threatening a hard line than by actually executing on the hard line and throwing us into recession. I think there was a practical element to Trump's change of mind. He wasn't going to get lower interest rates to combat the slowdown the tariffs had caused, because the tariffs would also produce inflation. But I think he didn't realize how so many hedge funds decided that he was willing to burn down the village in order to save it, so to speak, which is why they sided with arsonists. Then the arsonists disappeared, and they had nothing to save them. How could this happen so quickly? First, as those who shorted the market now realize, the president's pivot was wildly bullish for the very companies that had previously been hit the hardest. Take NVIDIA. On the one hand, Trump effectively forced NVIDIA to take a $5.5 billion charge for chips it could no longer sell to China. On the other hand, he's now out there helping NVIDIA sell chips to some of the biggest clients in the world, the Gulf monarchies. NVIDIA stock has made a historic comeback. Buy, buy, buy. Second, We have almost no new supply in this market, none whatsoever, but we have some of the most voracious buybacks I've ever seen. I know it seems absurd, but without new supply from the IPOs and secondary offerings, if anything good happens, those caught offsides would have no choice but to pay up and up and up to get all the stock they needed. There just isn't enough supply for them to quickly turn bullish, and that's happening right now. Third, without huge tariffs, the possibility of runaway inflation is taking a back seat. That makes it much easier for the Fed ultimately to cut rates, creating a far more positive backdrop in the future. Fourth, the earnings simply failed to fall apart. We just went through a very good earnings season. There's no fundamental reason to sell. In short, our arbitrary and capricious president fooled the smartest people in the world, while the retail investor, the home gamer, you didn't sell. Like it or not, President Trump 2 morphed into President Trump 1, and those who banked on him wrecking the stock market, well, they made a huge mistake. In retrospect, on April 9, when Trump posted on Truth Social, quote, "This is a great time to buy," end quote, he nailed the bottom because, alas, he created the bottom. He created it by hiking the ball at the worst possible time for the bears. April 9th ended up being the largest one-day point gain in Dow Jones history, just under 3,000 points. You just had to listen to him. Very few bears did. And you made a fortune if you listened to Trump, because he decided to stop fighting the stock market and started embracing. The bottom line, the bears are paying the price, while the individual investors who held on are basking in the glory of one of the greatest rallies ever, as the president ultimately made the extremely rational decision to not destroy the entire stock market. Maybe more of us should have seen that coming, especially when he told us it was a great time to buy. And indeed it was. What a call. Hey, why don't we go to Mike in Colorado? Mike!
Hey, Jim, Mike from Colorado Springs.
Mike, what's happening? We went to Colorado Springs. We loved it, Mike. Hugely fun place.
Yes. Hey, first I want to say thank you for all the help you've given us over the years, especially when the market is going crazy and you are the voice of reason.
Oh, thank you. We did not want to punt and leave this stock market. We had a feeling that things could get better. Thank you for recognizing that. How can I help you?
Jim, I'm 68 years old and retired. I bought UPS 3 months ago at $114 for its 6% dividend after listening to the CEO at their last conference call. She explained their plan for profitability post-Amazon. The stock is now 100. Should I buy more, hold on, or find a better dividend?
I think that FedEx is going to clean their clock, frankly. I think that Raj Subramanian's a better operator, and you're on the wrong horse. I'm sorry. I thank you for the kind words, but you are on the wrong horse.
Don't buy. Don't buy.
How about we go to Dylan in Pennsylvania? Dylan!
Hey, Jim. Hey,
Dylan.
Booyah to you. Thanks for taking my call so much. I'm a long-time listener. Thanks for all the education and experience that you've shared with us small guys out here. So I really appreciate it.
Oh, thanks, buddy. Thank you. Fantastic. How can I help?
So I was calling you today about a telecom company. AT&T is firing on all cylinders, and after the Warner Media spinoff and years of stalling out around the $30 mark, the stock is up nearly 69% over the past 12 months and within striking distance of recent highs. With their enterprise partnerships and driving a wave of IoT device and connected vehicle activations, which scales well on top of their core wireless and fiber network, I was wondering, Jim, do you think that they're going to be able to break above that $30 mark?
I will tell you this. I think it is going in the right direction, and I would be a buyer of AT&T. All right, listen to me. Like it or not, Trump 2.0 morphed back into Trump 1.0, and those who stayed the course through the tariff turmoil can now bask in the glory. The other guys, they're offsides. Everybody tonight, could Disney stock head to infinity and beyond after last week's post-earnings pop? Don't miss my C-suite exclusive straight from the company's upfront. Then, what natural gas stocks could see some energy ahead? I'm revealing my list after the course recent rally. And later, I'm bringing you my exclusive with Shoemaker on holding after today's remarkable run-up. Stay with Cramer.
Don't miss
miss a second of Mad Money. Follow at Jim Cramer on X. Have a question? Tweet Cramer. Hashtag Mad Mentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.